Is the housing market finally turning around? Pending home sales just hit the highest level in nearly 4 years. Zillow says the market recovery may be stalling. Fannie Mae is quietly buying billions in mortgages, and gas prices plus jobs data could impact mortgage rates next. Today, we're going to be breaking down the 5 major headlines that every homeowner, buyer, and real estate needs to pay attention to. So, hey everybody, welcome back to the channel. Home Loans with Walter here. So, if you want any updates on mortgage rates, housing trends, reverse mortgages, and anything about the economy explained in plain English, make sure to subscribe. So, let's jump into the real estate stories this week. And as always, I'm Walter, your local mortgage expert. Whether you're ready to buy or looking into your next real estate investment, I'd love to help you, guide you through that process. Use the link below to get started. And as always, if you find this kind of content helpful, don't forget to like and subscribe to stay up to date with the latest mortgage rates and trends. And you'll see now, this is the Mortgage News Daily. This is just the current rates nationwide. So go ahead and take a look at that. And as always, the links will be posted in the description below. So going into our first article now, pending home sales hit the largest level since 2022. According to Redfin, home sales just hit their highest level in nearly 4 years. Sales are up about 7.7% year over year, and one major reason appears to be a temporary relief in mortgage rates. Here's the interesting part though. Many buyers are, while activity is improving, it still doesn't look like the crazy bidding wars that we did get in the early 2020s. So inventory is also growing, but more homes are sitting on the market, giving more buyers more options and reducing some of the intense competition that used to take place. So this is starting to look more like a balanced market instead of a seller-dominated market. But while Redfin sees more buyers stepping back from the market, Zillow also says the recovery still may be fragile. And so with that being said, Zillow says that the higher rates are slowing the recovery, which, it makes sense, right? Zillow's latest market report says that higher mortgage rates are slowing down housing activity again. So according to Zillow, home values are still slightly rising. Inventory is building, but buyers are becoming more cautious. The average mortgage payment on a typical home is lower than last year, but affordability is still a challenge for many families, right? We still have slightly higher mortgage rates than what people are looking into, and the job market isn't the greatest right now, but it's just one of those things, and it's just creating that perfect storm. So Zillow says that new listings are now growing faster than home sales, and so that means resellers may need to price more competitively moving forward. And so with that, right, Redfin is also saying that mortgage rates that there may be another major story happening behind the scenes, involving Fannie Mae. So Redfin, like I just mentioned, or Realtor.com reports that Fannie Mae increased its retained mortgage portfolio by about $36 billion in the first quarter alone. Basically, Fannie Mae is buying and holding mortgages and mortgage-backed securities. So what does that mean? Typically, when large institutions buy more mortgage-backed securities, it can help improve liquidity in the market, and potentially it keeps rates from rising even more aggressively. So this appears to be part of the broader efforts to stabilize housing activity during a slower market, which is, something that Fannie Mae is, they are actively trying to help and keep rates lower so that more people can get into the homes that they need. So this doesn't automatically mean rates are going to be crashing lower tomorrow, but it shows that the major housing institutions are actively supporting the markets, which is what they're supposed to do. So, and whether mortgage rates fall or stay leveled maybe depend heavily on the next story, which is the jobs market. I'm pretty sure you guys have seen all of that. So in April, jobs reports beat expectations. The latest job report came in much stronger than expected. The U.S. added around 115,000 jobs in April, while unemployment stayed at 4.3%. Normally, strong job growth sounds great, and it's good for the economy. But there's a catch. A stronger labor market can make the Fed Reserve likely to cut interest rates quickly, and if the Fed keeps rates higher for longer, mortgage rates could also stay elevated for that time. So right now we're starting to see this weird combination where housing activity is improving, and buyers are returning, but mortgage rates are not dropping as fast as people hope. And there's one more thing that can infect inflate or affect the interest rates, which is energy prices. I'm pretty sure you guys have all seen this. And with the Wall Street Journal here, gas prices could impact mortgage rates in some way. So the Wall Street Journal recently highlighted concerns around rising gas prices and energy costs. When energy prices rise, inflation pressure can increase across the economy. And if the inflation stays sticky, the Fed may continue interest rates to stay elevated. So that means mortgage rates could remain volatile over the next several months. So for buyers waiting for the perfect rate, the reality is we may continue to see ups and downs instead of just one fell swoop going lower. And so lastly here, I wanted to touch base on a little bit more for the reverse mortgages. So the reverse mortgage has an update. Heckams, the world has also discussed that they're calling a new chapter for the reverse mortgage industry. They're talking about the changes that have been happening across the market and how reverse mortgages are starting to evolve as more and more retirees are looking at more ways to improve cash flow in retirement. So with many seniors holding significant home equity, reverse mortgages may be becoming a bigger part of the retirement planning conversation. So that's something you may want to discuss with your local professional here to see, if something like that would be of better choices for you. So what do you guys think here? So what do you guys think? Are we finally starting to see the real estate housing market, or is it just a temporary bounce that we're seeing in the market? So drop your comments in below, and if you're thinking about buying, selling, or learning more about reverse mortgages or any of the other mortgage products on hand, feel free to reach out. Don't forget to like and subscribe, and we'll see you guys in the next video.